Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 24th of February. Starting off with Empire Metals, which seems to be rising with the other metals stocks at the moment. Here we've had a bear trap from below the December support at 1.02 pence. That was in the early part of this month. We've broken a line of resistance there from November. And if we can break the 50-day moving average at 1.2 pence, this chart would have a pretty good look. It's also backed, or the bulls are backed by bullish divergence in the RSI window. We had a lower low for the February, but the RSI was actually slightly higher, so that could provide the momentum for a turnaround and take the shares up to the top of the December trend channel at 1.9 pence, maybe as soon as the next 6 to 8 weeks, something like that. Ideally, it would happen maybe even by the end of next month, but let's see how we go after that bear trap reversal that we've had. On to Eurasia, which obviously has been struggling in recent days. The initial idea here was that the shares would deliver a triple bottom off the old September support area, also the low back in the early part of last year as well, so back in January, so that was a decent triple bottom, potential triple bottom there. There was a rally yesterday, but that just failed near the old support, so 19 pence, and we've gapped down today. The low today so far has been 8.75. That ties in with the bottom of the gap from back when the shares were suspended, so there was a back gap left down towards the 7 pence area, 7.5 pence, actually 8 pence area rather, which is the old February peak from 2020. So above 8 pence, the bulls have got a chance of a recovery. The other positive, if we can point to positives on a day like this, is the way that the RSI at 22 out of 100 is the most it's been since the big rally in the shares began. So we haven't been that oversold for quite some time. So really holding 8 is what we need to see there for Eurasia, and if 8 holds, then you've got the chance of the shares bouncing to try and fill that gap, and the old resistance at old support rather, becoming new resistance at 14.5. So 8 and 14.5 probably the levels now for Eurasia to keep an eye out for, rather. Moving on to a mining stock which is faring rather better at the moment. We've got Fresnillo. Here you can see that there was a double gap down at the beginning of the month and then a gap higher today. That's an island reversal, and I suppose in a way it's actually it could be a bear trap island reversal in the sense that the old low there from back in July was £7.44, so we close above that. That would complete the island gap reversal, or island bottom reversal rather. Initial target back up to £8, which is the top of the first February gap, and also that line of resistance there at 8.05 from November. So the £8 area possible if we can get a decent close above £7.44. Otherwise, I suppose you'd have to allow down to the £7 area as a stop loss. A little bit of a messy situation there, but just worth highlighting the possibility of these shares filling the gap up to the £8 area. Another metals company, Golden Prospect. Here we've got a situation where we've broken that line of resistance from back in May. That was around the 44 pence level, and above that, looking obviously for the shares to retest the post-July resistance of 51 pence. But it's the trend change, really, which is exciting on this particular chart. At this stage, only back below the 50-day moving average at 41, really turning this situation bearish. Here we move along to Hochschild, which has at the moment broken a line of resistance there from back in November after the gap down and gap up. Rather messy chart, very volatile chart there, but above 105, initial target obviously the 50-day moving average at 116, but there could be enough gas in the tank here for the shares to hit 130, which is post-January resistance, and also backed by that bullish divergence line there, the uptrend line in the RSI window. There could be momentum to get to maybe even higher than £1.30. £1.30 valid while we hold above the 105 area. Seems to be a decent technical situation. Onto a stock which has had a bit of a hiccup of late, but looks like it's coming back well. We've got that rising trend channel which I drew previously. We had another test of the floor of that June uptrend line there at £3.25 and bounced well since then. Initial target here up to the 50-day moving average at £3.91, and then after that looking for the late January peak at 416. But the big picture here is that while we hold that June support line, we could head up to £5 maybe over the next couple of months on Kistos. So it looks like it's back in business for the bulls, especially given the way that shares have managed to stay above the 200-day moving average since the end of 2020. And that is something you only see, such extended price action above the 200-day line is that something you only see. On to a stock which doesn't have much charting data, but the big break came yesterday ahead of today's news for Myler. That broke a line of resistance from the end of November around 2.25 pence or 2.25 pence. Current situation is it looks like we're in a rising trend channel which could hit up to 3.6 pence over the next few weeks, maybe by the end of next month, and only really well below 2.2, delaying the recovery idea for Myler in the near term. Onto a stock which has managed to weather the slings and arrows of the latest price action in the market. Beautiful breakout that we had some days ago now around the 0.09 pence area, and we've made a good percentage gain already. Had a rather ambitious sounding target up to 0.19 the last time I looked at the shares. That looks like that could be hit over the next couple of weeks, something like that. Start of the recovery here was heralded by that bullish divergence there going into December, and then the RSI pushing up from there. And we've also had the hint that there was something good coming with the unfilled gap to the upside off the lows, which the shares delivered just a week or so ago. So looking pretty good there. The upside certainly valid while we hold above the 200-day moving average at 0.13. That could be sort of almost like a trading stop loss, but 0.19 to 0.2 looks to be on the cards now, given the sharp turnaround at Mosman that we have seen of late. Another stock with not much charting data is PCF. Here we're just breaking that line of resistance from the end of January, so that's around or versus the 9.5 pence level, let's call it. Above that, we could retest the best levels to date, around 15 pence, maybe by the end of next month. We've also got an uptrend line in the RSI window, which should deliver the goods. Bullish while we're above 9 pence on a mid-price basis. One of the stocks which seems to have decided to deliver a decent turnaround today is Parkmead. Here you can see that we've broken that line of resistance from October. That was at 37.5, and we've got a rising 50-day moving average as well, which is always a decent clue to a market improvement or a stock improvement. And as well as that, we've had a bear trap from below the January floor at 36.4 pence. So all in all, above the 50-day line, looking for the shares to at least fill the gap up to 44 pence or 45 pence, and then maybe by the end of next month through to 50 pence. So a decent turnaround there for Parkmead on a technical charting basis. Finishing off with Shanta, which is obviously mirroring the excitement we're seeing in the gold market at the moment. Here we've broken a line of resistance from July. That was around 10.5 pence, and weekly close above that could give the shares the momentum to hit the top of that broadening triangle from back in March last year. That's currently pointing as high as 21 pence, maybe on a 1 to 2 month time frame. But a decent turnaround there, especially given the way that we've just closed that gap from December, the gap down that we had at just under 11 pence. That's it for me today. More updates tomorrow.